the context behind what that property is worth, not so much what the other properties around it are doing, but what that particular property is bringing in from a net operating income standpoint.
All right, guys, welcome to another awesome episode today. We have Rey Reyes. He's been actively investing in residential real estate since 2005 and now has focused exclusively on multifamily since 2016. He has led MI Real Estate in investing in 4 multifamily properties in Alabama, Florida, Tennessee, totaling over 292 units and $17 million. We're going to hand it off to Rey. Oh, hold on. Before we say that, please go ahead and if you can, hit the subscribe button, leave us an awesome review and a 5-star. Go ahead, Rey, if you could take us from there and let us know, how did you get started and you know, what inspired that passion to get into real estate? And also, as we've talked before, you're a prior active duty Army officer, correct?
Yeah.
Awesome.
So it's, for me, I tell you, I mean, from very little, I remember always having a passion for real estate. Monopoly was always my favorite game. And it always dawned on me, like, to win in Monopoly, if you think about it, you can't have just a bunch of cash, right? You got to actually do something with that, because eventually you start paying everyone else when you land under properties. So that kind of stuck with me. So that's kind of my initial kind of thought as we go into this. I came from a poor blue collar family, and so had to kind of work my way up to a point where I could actually do my own investing. I knew that I needed money. I knew that I needed some level of education. And so, through trials and tribulations, I joined the National Guard so I can get my GI Bill. And from there, so that was an enlisted contract. And then I liked it so much that I decided to get a commission. So I went back to college, got my degree and got a commission in the Army. And so it took me a couple of years after that to really get into real estate investing, because as you guys know, both being in the service, they kind of bounce you around right at the very beginning between training and, your first couple, moves are kind of like you're still trying to get a feel for it. But once I got settled, I always had in the back of my mind that I would go into real estate. And so that was kind of the beginning of my journey.
Awesome, man. And then as you got interested in the real estate and you got settled in, how did you find your first deal, and how quick did you accelerate to finding, going from that one to maybe, I don't know how many residential units you had?
Yeah, so it took me, so the first assignment I got was Fort Campbell, Kentucky, and my wife being from Florida and me liking the South a little bit, decided, well, we probably don't want to buy something here, right? And then so this was right before 9/11. So lo and behold, right after that, I got bumped off to Iraq. I'm not Iraq, correction, Afghanistan. I was in Afghanistan, and basically it took me through my, probably as a junior lieutenant before I got to a place where I could actually invest. And the idea was, at least at the time, was I'm going to go somewhere and I'm going to buy a house. And then once I leave there, there'd be an accident landlord. I was going to be an on-purpose landlord, because it was kind of the decision. The hard part for me was, being gone as much as I was, and you guys know this, your family has to kind of pick up pieces when you're gone. And so my wife was always a little bit hesitant for us to do any of these, buy a quad, live in one, and, because there's always a safety factor involved. So for me, it was a little bit harder to kind of get to accelerate, if you will, into something like where some people are buying one property, one property of 4 units, living in one and renting the other 3, and kind of flipping from there. And so it took me a while. I had probably when I was a captain is when I actually started doing a few more. I only had 3 residential properties, and it was basically properties that I bought because I lived in them for a while, and then I rented them out as I moved. The advantage to doing that is obviously when you're buying a house that you're living in, you can either do your VA loan or you can do an FHA loan. So you really don't have a ton of money that you have to, to give as a down payment on the property. Once you go into actual investment properties, then the numbers change. Now you have to have, unless you find some other alternative way to do it, you have to give 20% down. So my first investment property wasn't until I was a captain, and so that was the property I was actually stationed at Fort Sam Houston, and I bought a house for us to live in, and then I bought another property as an investment property. It was a single family with a trailer, so it was basically a duplex, if you will, and so that's kind of where I got going. It wasn't until probably around 2000, well, it was 2016 where I decided, and this was towards the tail end of my career, that if I really wanted to do real estate full time, just like in Monopoly, you had to go from houses to something a little bit more than houses. And so that's kind of when I jumped into the multifamily space. And it took a little bit, obviously, and in fact, in 2016, I was getting ready to go back overseas. So I took that as an opportunity to sort of get myself educated on the differences between investing in single family and multifamily. But at the very beginning of 2017, while overseas, I invested in my first syndication, and this was as a passive investor.
Can you tell us what was the process on that mind shift, right? Because a lot of people, they just stay in the side of real estate where it's like single families or small multifamilies, and a lot of us don't realize that we can actually afford to invest in large multifamily deals and do something larger than what we probably consider doing always.
Yeah, that's a great question. I guess in my mind, as I knew how long it took from the process of you're looking for a property, you're going through the lending process, you got to come up with some money, and then you buy a house, and then it's one house, and I don't care how good of an investment is, unless you just happen to find that one where somebody just has to sell and they're willing to give it to you $30,000-$40,000 discount. You're not going to be making a ton of money monthly. And so if you want to really create some passive income, and that was my goal towards the latter part of my career, is like, okay, what do I want to do after this? So I want to just go, like a lot of folks do, retire and then go basically work somewhere else, just because, not because they want to so much as because they have to. And so I figured I needed to scale up. A lot of the things were still the same, but with multifamily, you can basically run through that process. It's a little bit more work. It's a little bit more work, but you can go from 0 to 100, just like that. And so that was kind of what did it for me. I mean, time, you don't get back. Time, you just don't get back. And so, especially as we get older, you start seeing that, and you start looking at that, and you're going, do I really want to put my family through, a position where now I jump from active duty military to work in some place. And if I really want to make some money, 6 digits, you're going to have to hustle no matter what where you're at. Did I want to do that? And so for me, that was, okay, how do I do it? Go in through multifamily, start scaling my investments.
Yeah, no, that's amazing. And I think that's like an aha moment. Some investors end up having, they're like, wow, I can actually do this. And we always have limited beliefs until we actually see what is possible, which I think is awesome that you've been able to get so far. So you mentioned education. What education did you take to make you feel comfortable to take that next level as a passive investor?
So the biggest thing is understanding all of the terminology, right? There's not a ton of difference when you're looking at a single family property as an investment. You're still looking at how much rent you're bringing in, how much rent what your cash flow is. And you're certainly, from a value standpoint, you're doing what's called a comparative market analysis, where you're looking at the properties in the area and you figure out, okay, this is how much they're selling for. And then based on that, you can kind of have an idea of whether you're buying at a good price point or not. That's a little bit different in multifamily. So the thought was, and why I did a passive investment up front, is because I wanted that to be my education. So I went in as a passive investor in the multifamily, but the idea was always, in my mind anyway, to transition into active. But that was a good opportunity for me. Some people do go through the mentorship route, where they, you know, they sign up with a mentor, and a mentor sort of explains to them and kind of keeps them from making those mistakes that are hard to come back from. But it's at a cost. Most mentors are not going to do that for free. But in my case, what I did is I had some money from my investments in single family, and I started selling my single family, and I started using that money to kind of make the leap. And the idea when I talked to the syndicator that was involved, the first deal was always like, look, I want to do this. I'll be a passive, but I want to look behind the curtain a little bit, right? I want to be able to ask questions. I want to see how you're doing that. And plus, I'd already started reading certain books on, you know, multifamily. So I wasn't going into this completely blind. You know, there isn't a real, unless you know, go completely commercial real estate and you get a CCIM license or you do something of that nature, there's no real education that you can bring to bear other than you got to know some math, right? You got to be able to at least understand, you know, when you're using a spreadsheet, what it is actually doing, but not a lot. And then those terms, you know, as an example, like I said, in single family, you're doing comparative market analysis to kind of price a property. In the multifamily, you're doing a underwriting, which is to say underwriting to see if it makes sense. But instead of using the same formula where you're looking around to see what else sold, you're really looking at the income that a property can provide and using that as a kind of the context behind what that property is worth. Not so much what the other properties around it are doing, but what that particular property is bringing in from a net operating income standpoint. So little things like that you just have to understand and make those transitions in your mind.
Yeah, and I think that's you know, very interesting and great point that you brought up there. That the valuation of a multifamily commercial asset is completely different, and I love that. I think that's the part that got me is that comparables. I don't have to exactly compare. You are looking at demographics. You are looking at certain things of the city, but you're not exactly looking at, hey, the market's tanking or my neighbor his lawn is not done and it's going to affect my apartment building. So that's an amazing point. So when you got into this, that meant that syndicator, he was comfortable with letting you see behind the curtain and letting you see everything?
Yeah, I mean, obviously, I mean, when you're a passive investor, you're already establishing a relationship with that syndicator. Whether you want to kind of use that or not, you have it available. The information is available to you for you to ask questions. If you're just a passive investor and you know that person has made money for you before, or you know, like happens a lot of times, it's a referral. You know, you talking to a friend and friends, yeah, this guy, hey, invest some money with this guy. He really made me some money through this, you know, multifamily. And they may not even know all the details, but they know enough that they're getting some money passively that they weren't getting before. So they'll refer it. So you'll establish that communication with that syndicator. And you can kind of ask some questions there. Even before you actually make your investment, normally there's some sort of a webinar or something where that deal is potentially presented to you, and there's some contact numbers and folks that you can get a hold of. So it's there. Now, to take it to the next level and have them kind of let you see some of the documentation and start, letting you see how they deliberate, that general partnership deliberates about how they're going to communicate with their investors. That's a little bit more. And so that takes some getting used to from that syndicator, but enough to, to explain to you, okay, why is this a good deal, and working you through that. And if you've got some questions, they're obviously going to want you to invest. I mean, they're excited about it. They're obviously, think it's a good deal. Otherwise they wouldn't be investing their own money and I always recommend that, by the way, syndicators, if you're a syndicator, or you're a passive investor, ask that syndicator how much of their own money is in the deal. Make sure that their money's in the deal, because that just gives you another level of confidence that they're making the right decisions, because they're exercising care with not just your money but theirs.
Absolutely, due diligence important. So then from there, what steps did you take? Because obviously you have your firm, and you went on to the next level of your education and execution in multifamily. So how did you take it from there?
So after investing in one passive deal, I actually invested in another one while I was still overseas. And then when I came back, I was really towards the tail end where I was like, that was going to be my last duty station more than likely. And so at that point, I made a decision that I wanted to do this as an active investor. And so using those contacts that I made through that passive investment, I was able to kind of maneuver to a general partnership in a deal. So a little bit different, right? I mean, same terminology, you're still going through that process, but now you have a little bit more, you're an active participant in the deal. You're underwriting from the very get-go before offers are made. You are making decisions about, what the exit strategy is going to be, how are you going to take that property from that net operating income where it is, and how are you going to raise that net operating income in order to make some money and pay off the investors and yourself in the future. So you start looking at those things a little bit different. So, but it was always through those connections that I made as a passive investor that I was able to make that transition.
No, that's great, man. That's great stuff. German, what you got?
No, I was just gonna ask you because I think it's impressive, and I like the process, the what you've been going through and the path that you took. Instead of getting into a mentorship program, you actually went ahead and experimented with different syndicators. My question is right now, where are you for our audience? Where are you in regards to your business? Do you now? Because I know you. What is it called? You you don't, or at least that's what I'm reading on. You do consulting to other investors.
Yeah.
What else do you do? What else do you do on your business?
Yeah. So the key aspects of my business is obviously I use it as a tool to communicate with not just potential other syndicators or partners, but also with potential passive investors, which are also your partners. So I use that as kind of the structure by which I operate. And so in my particular business, my model is I'm looking for deals. If I find a deal, I will discuss with other investors and try to bring those people together into that deal. So on the acquisition side, I do that. And also, if somebody else finds a deal, then my structure is loose enough where then I can kind of focus on the capital raising aspects and the investor relations aspects, which is what I enjoy doing, to bring those capabilities to bear on those with that other sponsor, whoever it is that found the deal. So right now, my business consists of capital raising, investor relations, and the consulting aspects is if somebody thinks they have a deal, they want me to take a look at their deal, or if they're just wanting to learn, if about multifamily, they're trying to make that transition, I will do it not as a mentorship. Really, I just have that discussion with them, but I do have some private consulting that I do with another syndicator that asked me to help him potentially look at deals that they're getting and that other people are kind of presenting to them. So it's a lot of looking at the underwriting of those deals from a consulting aspects and helping people that have already kind of made a decision that they want to transition, but they're not exactly sure how. That's one aspect. And then the other aspect is the acquisition or the capital raising. So those are kind of the key things. It's kind of a center, but it's loosely structured that I can go in many different ways. And for example, right now where we are, obviously acquisition is extremely difficult right now. So my focus has been just kind of educating the folks that I'm talking with, understanding where we are in this current situation and cycle, and trying to get myself prepared, because I do believe we're going to be in a situation, within the next 6 months to a year, where it's going to be those opportunities are going to come to bear a lot of fruit. And so it's a lot of preparation right now. So it does obviously help in my case that I retired from the military and that I have the income from the military. So it's not like I'm, that I have to do something. It's not like I have to wake up. The only reason I wake up and do this is I really do love it. And what the heck else am I going to do? I can only, you can spend so much time. I got the kids over here. I'm surprised you can't hear them yet. They're making some noise already. But So this is a passion for me, and I love talking to people about this. And any way I can help, I'll do that. And then as I invest in other properties and other deals, I grow my own passive income for myself and for my family.
Awesome.
I love it, man.
Awesome.
I think this definitely allows opportunity for multifamily is all about teamwork, man. And that's the part I really love it, that you can, if you don't have a deal, but someone else does, you can help capital raise, and then you can get in the deal all together. Different companies, different firms, you name it, but you're doing good stuff together. That's amazing. So what is your syndication structure currently? Are you, and are you also holding off based on what you say, the current market conditions?
Yeah, so I've made a conscious decision that because of what I enjoy doing, I focus more on partnering up with others that are finding the deals. So they'll look at a deal. Now, from the very get-go, I'll start analyzing the deals that they think they have. So there's that aspect of it, because you have to be involved from the get-go. You just can't, by law and for a lot of other real tangible reasons, you don't want to, just walk up to someone and say, hey, I'm going to capital raise on your deal. It just doesn't quite work that way. So you kind of need to know that team that you're working with from the very get-go before they actually source the deal. But then when they find the deal, then I'll work with them. And I have several networks that I do this with, very loose networks, but it's people that I've known over time that are actually very good, and they enjoy the actual acquisition they enjoy the looking for the deal, which does take time, which is why syndicators get paid a fee, an acquisition, because there is a lot of work that needs to be done for them to find the deals that make sense, and a lot of that is not something that they're getting reimbursed for. So when they find one, they get paid for that. But so I prefer that. And so people look for deals, know that I'm interested in. If they've got something, I've got my own money that I can put into their deals. So it's not like I'm just, doing something, just kind of on the side. It's actually along with them. And so that's kind of how I focus. And so I like the co-sponsoring in short. I like to co-sponsor deals. I don't necessarily want to be the main sponsor of the deal because of the amount of time it takes, one, and two, because of what I enjoy doing more.
I hear you. And then the second part of that was, are you holding off on the market, current conditions, kind of preparing? Is that what you're doing?
Yeah, sorry, I didn't get that one. So you're absolutely right. I'm holding now. There's two things, right? One, we have all properties that we own that we have to answer to investors. And so right now we're doing everything we can to make sure that those properties are in the best conditions from a rental income standpoint as possible. And we're really focusing on the operational aspects of those deals, because that's you guys know this, that's where you make your money, right? It's the operations. You'll take a property if somebody's run down, you tighten up that operational ship, and next thing you know, you're able to increase the value of that property because you've increased the actual space, and people feel better living there. They want to live there, and living in a property is not a want. You have to live somewhere. That's one of the things that's always attracted me about residential real estate is, if you look at a lot of things that we spend our money on, a lot of them are needs. We don't need the fanciest phone. We don't need, the best of clothes. But what we do need is a place to sleep. Yeah. We need the safety of that, not just from a physical standpoint of you don't want to be out in the elements, but also the safety that comes with having something that you can kind of close yourself. And this is a good example right now with what's going on with the COVID-19. People are having to spend more time in these living areas. And so a lot of people are like, well, this is going to be a tough time for investments in residential real estate. A lot of us are looking at it in a little different light. It's like people are looking for bigger areas because they need that office now in the house. They're spending a lot more time. So if they're really in a small place, they're probably not happy at this moment. And, that's sticking in the back of their mind as we kind of transition. So a lot of people are saying that there's going to be some drastic changes in the way people kind of think about residential real estate. It's not going to be this this densification of urban areas, but it's not going to be counter densification where people are going to start sprawling out a little more so they can have their own space. So from a multifamily aspect, how do we capitalize on that? Well, obviously, we start looking at, okay, if we've got a property, are the units big enough where somebody can have an office space? Can you add that? That's some way that you can add value when we start looking at acquisitions again. And do you want a construction or a building that's basically straight up? That doesn't, everybody's got to go indoors. So if health is still something that's in the back of people's minds, maybe they don't. Maybe they want something like a townhouse. Maybe they want some garden, multifamily space where they have their own kind of entrance and exit. Still a multifamily, but it's not so condensed. So looking at what and starting to look at, okay, what is going to be next when those opportunities come, and they will, what are we gonna do to kind of maximize our the investment, my investment, and the investment of other passive investors.
I hear you. That is a great point that you brought there, because people, I have friends who live in apartments that are going crazy because they don't have a backyard, they don't have a porch, and they're like, I'm stuck between these walls, and I'm like, oh man. So, for those of us that have it, blessed that we can have a backyard or something like that, or a patio. But man, yeah, like people are going to be thinking very differently after this. That's a great point. German,
I would add that one thing that, that was kind of a struggle for me as when I was still active duty is, and I mentioned this, when I was in Fort Campbell, we don't necessarily want to buy there, but let's say I have some money and I want to invest, but it's not going to be there. We have to open our mindset up to understanding that you don't necessarily have to invest where you live. You can invest anywhere, right? And so, there's obviously some work happen in order for you to be comfortable with that. But that's not that big of a stretch, especially as military, because while you may be buying something where you're located, guess what? You're going to have to move at some point, unless you ETS or you retire there. You're going to have to move. And now you've invested somewhere else, and it may not be the best place to invest, right? And so I always, have people take this time and recommend to people to invest where it makes sense, not necessarily where it may be convenient to you at the moment. And so that's something that I hope that people take to heart, and they start looking at it and they figure out where they can swim with the current as opposed to against it. As if you think about you talked about demographics and you talked about other things. Obviously, you want to be in places where the population is growing, income, the economy, it may be down now, but at some point, there's still going to be some better opportunities and better places and other coming out of this economic problem that we have right now. And so you got to start looking at that and thinking, okay, where do I want to invest? It doesn't have to be where you're at. Start making those connections, those networks, working with people like yourselves, me and others that are in this community that are basically all over, and figure out where it is that you think you want to invest and start reaching out through your network and connecting with people. That's key.
Amazing, man. Yeah.
Like that. No, and actually it resonates with us too, because I tell people all the time, they ask me, how do you, I live in California and our properties are in Ohio, and I don't see myself investing in California. So people ask me, like, how do you do it? How do you, aren't you scared of having all your properties in Ohio? And I tell them, well, you probably invest in the stock market and you put your money on something that you don't see either. So it's basically the same idea. That's what I tell them. And I'm curious, right, with what class assets do you invest in? What are you going to be looking at?
So I regardless of where we are right now, and I really like the Southeast. I don't think that we're going to be in a position where people are all of a sudden going to decide that they really don't want to come to sunny places, to warm places as they get older, as they're potentially retiring. They're still going to want to come to places where it's where they want to live. And so I'm still focusing in this area. Obviously, I live in Orlando right now, and a lot of people are, Orlando's getting a little bit beat up because obviously they count a lot. We count a lot on the tourism, right? But what people don't understand is, you're not investing necessarily in a market. You're investing in submarkets. You're investing in kind of smaller niches. It takes me from where I live about an hour to get to Disney. People that live around me aren't working at Disney World. They're not working in the tourism industry, right? And so you got to kind of go a little bit beyond and kind of start really kind of picking those areas. Even if you're in a place where right now it's not doing well, look for those opportunities even within your MSA where there are higher income workers, where there are jobs that may not be as impacted. A lot of people don't know it, but here in Orlando is the simulation capital of the world. They do all the simulations. In fact, the military has a command out here, a joint command for military simulations. Everything from tanks to airplanes, everything you can. And we're actually going to a transition where more and more people are looking at that as the best way to train is through simulations. And so there's all kinds of stuff happening here in Orlando that are not necessarily tied to tourism. And guess what? As soon as Disney World is back on, it may take a little bit, right? People are going to be a little bit afraid, but eventually you're going to get that back. So it's not like, this is a forever kind of thing. Ultimately, from a kind of a macro perspective, people think that, you talk trade, you think China, right? And China has a big aspect of that. I'm hoping that we kind of shut down a little bit of the China bandwidth, frankly, based on some of their shenanigans. But really our number 1 and 2 trade partners are Mexico and Canada. And so when you think about Mexico and you think about Mexico's a G20 country. And a lot of people forget that. They think, Mexico, they thinking it's a poor country. It really isn't. And so you have a lot of the economy, that's coming straight in from Mexico through Texas and just kind of spreading into the Midwest, and it kind of goes from there. Obviously, this is all ground, which is using those lines of communications, those large lines of communication. So it's going to continue to be an increasing kind of an economic injection into the country because people want to trade goods. I mean, and so I think that places like San Antonio that aren't quite as impacted as Houston with the oil. Houston obviously has the oil situation going on right now. It's pretty bad, but San Antonio, not so much. I mean, when I was in San Antonio, the thing about San Antonio is that it doesn't kind of spike up or down. It's just kind of a steady economy. It's quite diversified, and so it's a good place for multifamily because it is a hub. It has a large population, and it's fairly consistent. People live in San Antonio. They kind of stay there. It's not a bad place, and so. I like that. Dallas obviously is a whole different monster, but it's still obviously, if you look at the numbers, it's been doing well for a long time, and a lot of that has to do with that economic boom coming from trade. So so those are, I would say, the markets that I'm most interested in.
Man, that's awesome. What you have to kind of see outside your industry to understand what impacts your industry, right? So that's great insight right there. German, what do you have before we start kind of wrapping it up?
Oh, no. I think it's great. We're actually looking, and I'm very interested in Florida. So you're there, and I think Florida is especially Tampa. I like Tampa.
Absolutely. Yeah. One other thing that I'm starting to look at, and I kind of mentioned this a couple times, is within the geographic regions, and you have different asset classes, right? And so I'm starting to look at senior housing. And when people think senior housing right now, they're thinking, these huge, large nursing homes, but not necessarily. I mean, you can buy a large single family house and convert it into basically 8 beds, depending on how big the house is. And the idea is that you're actually able to kind of, grow your income that way, as opposed to just a rental. You're actually taking that and convert it into senior housing. And what's happening right now is that a lot of people are kind of looking at these huge nursing homes, and they're seeing the negative impact of, coronavirus on them, and not even being able to see their families. Where you take that model of a home, and it is a senior living area. It's obviously not for those that need, you know, substantial care, but people that just need some oversight, maybe 24/7, just a nurse on standby, and really taking that model, because it allows you to kind of be more with your family. You don't have to go to these big nursing homes and risk something like you're risking with right now with coronavirus, with just one person, and all of a sudden everybody is reeling from the exposure.
Very interesting.
Yeah, so it's something I'm looking at. I mean, it's obviously want to be still continue to look, and not necessarily look at just one aspect. A lot of people are looking into self-storage. What happens in self-storage when people have to move because of economic conditions? Sometimes they'll scale into one place, and you guys know this from living and from PCS into one place to another. All of a sudden, you find that what you had in your old house that fit just fine doesn't fit where you're at now. And so, what do you do with it? I mean, you have to put it somewhere. And so, self-storage is looking pretty good. And so, you always want to look at one or two different asset classes, not just focus on one thing, because you got to kind of look at what's going on in the economy. And that's obviously key right now.
Okay. Yeah, no, that's great points, man. Great points into your insight of what you're going to do coming shortly. So kind of last question that we always wrap it up with is, and you kind of mentioned it in the beginning a little bit, which is, your family and real estate balance, your work balance. How do you do it? How do you make it happen? Obviously, your spouse, your significant other has to be on board. You have to take care of family as well. How do you make it happen, man? Because, we see a lot of real estate investors that don't necessarily know how to balance it, or they don't even talk about it. They may be making millions, but their family's not doing as well. So how do you do it, brother?
Yeah, so it's perspective, right? I mean, even let's talk a little bit about the different cultures within the military. I mean, we got Marines, we got Air Force, and we got Army, at least retired Army here. Yeah. And I remember when, and I mentioned this when I was in Fort Campbell, 9/11, it was basically about a 2-year period where I was kind of gone the whole time. I mean, work-life balance was, this was before you had Zoom and before you had any of this stuff. So, you weren't talking on a video to your family. And so I remember this, and it's kind of still stings, a little bit when I think about it, is when I came back from my deployment, my youngest son didn't recognize me. I mean, he was afraid of me. I mean, we're talking about a baby, right? But they were, they don't know you. And so to go from that perspective, I think it's kind of important to understand where I'm right now, and I kind of mentioned this, right? A lot of people retire out of the military, or they get out of the military, but if they're not prepared, they end up putting themselves in a sometimes better, sometimes a little bit worse position when it comes to, hours and family life balance, because nobody's paying you $100,000 or more a year if you're an officer, and that's kind of what you're looking at, to basically work part-time. You're going to be working 60, 80 hours, 100 hours, whatever it takes. It's just the bottom line. And so for me, I didn't want to do that. I wanted to kind of be in a position to have enough passive income. So between my retirement and what I'm getting from my investments, I don't have to work. I just don't. I do this because I like it. I would like to do better. Don't get me wrong, but I would like to do better. But when I get off of this call right now, I'm going to go spend time with family. They're right here. And I choose when I work and when I don't in this business. And you can't do that in a lot of businesses. And so for me, that's kind of, when I look at work-life balance, it's completely different. Now, there are people obviously that are, if you're younger and you're getting after this and you're house hacking and you're doing all this stuff, the important thing to remember is there's different theories of work-life balance. One is, you take a day and you divide it in 3, and that's, you take your personal time, your work time, and your family time, and that's kind of how you live the life. In the Army, work-life balance is you could be gone for months, and that's all you're doing is work. But when you come back, and you obviously scale down, the idea is you scale down quite a bit, and you spend a whole lot of time with your family. In the Marine Corps, it's probably very similar, where it's like you just got to choose your time. Whenever you can get it, you get it, right? And so, but the Air Force, I know the Air Force loves their 3 days, their 3 division of 1 day, and you guys love your time off. So you got a bunch of pilots that got to sleep and all kinds of stuff. the bottom line is, if you're working and you're trying to really get ahead and you really have to put that extra time, then your work-life balance may be a year or two down the road once you've got this thing cooking, right? It's a personal decision. I mean, you have to know it. Obviously, you know, your family has to be on board with whatever you're doing. Like I mentioned, my wife wasn't very keen about me house hacking, you know, when I was deployed, right? She wanted the nice house. She wanted to be in a really nice neighborhood. And guess what? Those don't pencil out that much.
Yeah.
They just don't. And so you got to kind of weigh those two and figure it out. But it is a constant struggle. You just have to understand, you have to kind of backwards plan it. Where is it that you want to go, and what's it going to take to get there? And so, and you know, no plan, you know, survive first contact. But if you have at least an idea or an end state, you can kind of work and kind of continue to move forward and make progress.
Man, I love it, man. You hit great stuff. And you know what? I'm just going to add one thing that you said there. My brother being the Marine gets more time off than I ever have. More of a desk job.
I retire possibly in 6 months. So it's like
he has the most desk job I have ever seen of a Marine. I'm gonna tell you. In this case, he's the Marine chair force. I'm the whatever.
You know, that's the beauty about the one thing I want to mention is the beauty about in the military and actually kind of in this multifamily is that you do build these relationships, right? Because, you know, in the military, it's obviously you're all kind of driving to whatever that goal is, whatever that mission is. And in multifamily, you have to work with others. And then that's the beauty of it, right? If you really enjoy that aspect, you enjoy helping, this is kind of one of those things that allow you to do that. It's not exactly like the military, right? You know, it's a little different, but there is this camaraderie that comes with, you know, with networking with others, and you're all trying to make it happen. You're all trying to succeed together.
Yeah, I hear you, man. Man, great stuff today. Ray, thank you so much for coming on.
My pleasure.
We appreciate it. Tell people where they can find you, man, and where they can reach you.
Yeah, the best way is www.mirealestate.us. That's from there they can kind of get me on any kind of the social media. I'm kind of plugged in from there.
Awesome, sweet, man. And he also has an awesome Facebook group. Check it out. I forget the name. What's the name? Military
and Veterans Real Estate Investing Group. Yeah, so it's really good. And I try to focus it and keep it to just military members and families. And so I do a lot to just try to make sure that I'm not just letting anybody in, but that the right people are in there.
Awesome, sweet, man. Well, again, thank you for coming on. And if you're listening, go ahead and hit that subscribe button, leave us a review. Thank you guys so much.